We're live from the Goldman Sachs Communicopia Conference right here in San Francisco, monitoring the headlines, bringing you interviews all morning as well from some of the top executives, including, of course, John Stankey, who runs AT&T. John, it's good to see you. Been a while.
Hi, David. Good to see you.
Since we've been in person, at least. Want to get right into the business. A few weeks ago, one of your key competitors, T-Mobile, laid off a lot of people and said what it takes to attract and retain customers is materially more expensive than it was just a few quarters ago. Are you finding that at AT&T? You know, and if so, with a new more expensive iPhone company coming, you have to sort of wonder how that's going to play out as well.
Look, we've been pretty stable in all the things we've been doing to attract customers. I can't speak to their circumstances or what they're having to do to grow their customer base, but in our situation, we've had a very consistent go-to-market strategy. We've been doing it for several years. We haven't really backed off of it. In fact, I think we've gotten better at it. We see on the margin, it's become a little less expensive for us to bring customers in, and we've been pretty diligent about making sure we bring in the right kind of profitable customers. So I can't say that that's necessarily a dynamic that we're seeing within our business right now.
No. I mean, Sievert may say that it's getting more expensive for them, but you're seeing it sort of.
Yeah, I don't know his business, and I don't know exactly what they're experiencing, but in the approach we're using across the various distribution channels we've built, we're not having that issue.
What are your expectations for the new iPhone?
I would expect that, like any release, it's going to have a little bit of an uptick that occurs during that period of time. Traditionally, what we see seasonally is it slows down the month or so before a release. It comes out, there's a bit of a spike. I think the phone will obviously be attractive and do well, but generally speaking, the devices are getting a bit more expensive, and I think consumers are being a little bit more guarded at how frequently that they're upgrading. So I think it'll do well. I don't have any reason to expect that that's the case, but I think consumers right now will be a little bit selective if they can defer ultimately replacing the device.
Talk about the lengthening of the product cycle. So do you expect that to continue? You don't think this new phone is going to have the impact of perhaps reverting that or bringing it back a bit?
I don't think so. I think what happens, and we've seen this not just in phones, but if you go back to the laptop dynamic, et cetera, anytime price goes up on something, it tends to suppress demand a little bit. The prices have generally been going up on devices. Therefore, I don't think it's going to necessarily reverse the demand cycle.
You've been bringing prices up a bit as well, effectively increasing it. How sustainable do you think that is?
Well, look, we've been investing an incredible amount in the business, as the industry has. I mean, just in the 3 years I've been in this job, we've done $100 billion of capital investment and spectrum investment. And ultimately, when you make that kind of investment in your asset base, you have to recover and return. And customers have been using the product extensively more. We see growth in data driving up almost 40% a year. And so as a result of that, there does have to be some recovery, and that comes in pricing in some regard. We've been doing it in a way that drives great value back into the customer. So while we've been able to drive our ARPUs up, our churn has remained relatively stable, and we've been giving the customer more value for what they're paying us. More data, more freebies that come along with the service that they use, like hotspot data and capabilities, and a lot of other things that we've been doing to try to make sure that as the customer's paying us a little more, they walk away feeling good about that.
That said, doesn't go without notice that I think it's something like half the subs right now new subs are being captured by cable. And their pricing, obviously, a lot lower than you are. Is that a competitive threat that ultimately will mitigate your ability to continue to raise price?
I think, frankly, if you look at where cable is playing right now, they're playing in a particular segment of the market. Many of our customers are actually part of family plans or they're multi-line accounts. We haven't seen that kind of incursion coming from cable. We've been very good. As you see, our churn numbers have been really attractive. We've got great combination going of increasing ARPU, low churn, improving customer satisfaction. So I do believe cable will have a certain place that they play in the market, but ultimately over time, when demand continues to rise at the level it is and a customer uses 30, 40% more data a year, and if you're on a variable cost structure for your product, which cable is, that's a hard place to be a low price leader because, your input costs are going up just as the consumption goes up.